Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Elena Garidis, co-founder and CFO of Defy Trends, to discuss making more informed investment decisions when it comes to crypto. Elena, it's great to have you with us. Welcome to Trade Talks.
Thank you. I'm happy to be here.
All right, you got it. And give us a brief overview of what Defy Trends is and what it does.
Sure. Defy Trends, you can think about it as a simplified Bloomberg terminal. So essentially what that means is we create trading tools and data insights that are high quality, but they're actionable and digestible. So as a user, you don't have to be a data scientist or have a financial background to understand how to interpret this data. So breaking the barriers to entry and leveling the playing fields in crypto investing as we know it.
So Elena, how can one evaluate different indicators to make better decisions with crypto trading?
So there's a few different indicators that you can use to understand, first of all, what's happening in the market in general, and second of all, to evaluate different coins or tokens. And that depends on multiple different factors, including the sector, for instance, that the coin is in. So for example, if you're looking at layer ones, something that is paramount is to look at adoption. So adoption both on the developer side as well as the user side. So how many people are using the apps, how many apps are being developed. So some indicators that we look at very simply is from net address growth, but then we also look at indicators such as NVT, which means network value to transaction volume. So looking at whether an asset is overpriced, underpriced, especially relative to different competitors in the space. If you're on the other hand looking at tokens that might be more influenced by what's happening socially, for example, meme tokens or game tokens, we also pull in social sentiment, which is an off-chain indicator. So it's created from data that we pull from likes Twitter, Reddit, for example, and understand what are people saying and how are they acting based on this information. So you always need to correlate it back to price. So there's multiple indicators, but first of all, I would say focusing on adoption of a certain ecosystem or project, and then more granularly, especially if you're looking at more shorter term trades, you can pull in sentiment and technical analysis as well.
Let's talk about Ethereum specifically. There's been a lot of challenges to Ethereum's position ahead of the merge, as well as discussions around which layer one will beat out the others. How are the different layer ones been faring in this market based on this data?
Yes, obviously it's hard to deny that the layer ones have consistently taking a big hit, and usually they go in line with Bitcoin as it's leading the market, which is now, as we've seen, very highly correlated to traditional markets as well, which have taken a plunge. Actually, I believe the correlation is around 0.9, so almost close to 1. But going back to the other layer ones, so there's been a lot of challenges here, and what we're watching again is adoption. So one thing is the revenue. So gas fees for Ethereum have dropped incredibly, and that's challenged a lot of miners, especially also in Bitcoin as well. And as we inch closer to the merge, I believe there's a new meeting on July 14th with the developers of Ethereum, and the next test will be deployed on the Borley network, and then testnet, and then the mainnet will be next. So we're expecting that to create a push for Ethereum. And in terms of the other layer ones, we'll see what the consolidation will bring us. But as I said, something to look out for is that a lot of these layer ones have lost a lot of market value. And it's interesting to also look at the ecosystem as a whole. So looking at the DEXs, looking at any DeFi protocols, especially in smart contract layer ones, and how they fared as well in terms of adoption can give a lot of insight into the layer one as a whole ecosystem.
Let's talk about adoption from a different perspective here. Why is Grayscale's battle with the SEC over their Bitcoin ETF, or the conversion from GBTC to an ETF, why is that significant to the space?
Yes, that's a very good angle to look at it from the adoption perspective, because institutional money has entered the space now quite significantly, and financial products like Grayscale's ETF play a big part of that. And the SEC has found itself in a little bit of a precarious situation, which after they denied the ETF application, Grayscale immediately turned around to sue them. And the reason for this is quite interesting. So Grayscale has the GBTC product already on the market, so it's a loophole in the regulations, which allows them to provide a vehicle for investors to invest in. However, it's a trust, and so investors invest in this GBTC vehicle, and after 6 months, they're able to sell their units OTC. So it's quite different from an ETF. But what's happened now is that these investors, when they entered the GBTC trade, a lot of the shares were trading at a premium a while back last year, and now they're trading at a discount. I believe it's around 30% discount. So what the SEC is finding itself in this struggle to uphold its mandate of consumer protection, as well as also looking at earlier approvals of future-based ETFs in crypto, which are contrarian now to their rejections of this. So it seems like the SEC is trying to stall to gain more oversight and surveillance over the crypto markets before it makes a decision to approve this. However, they are not standing on very solid ground, and I think this will set the precedent of just more financial tools being able to enter the crypto space in the United States, and therefore again leading to more mainstream and more institutional adoption. And that's why I think this is a quite pivotal moment, because the balance of power is shifting.
All right, Elena, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you, Jill.